Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Monday, June 15th, 2020. Markets have just finished trading, and I'll do a recap only on the markets, on the major stock indexes and futures. We won't do the trade ideas like the earlier video today. To kind of recap, since the last post that was posted earlier today, stock futures at resistance, reversal likely. I highlighted some areas on ES, which was at 30.7250 at the time, and some of the other futures that had just over what I believe to be a momentum-fueled overshoot of some of those key resistance levels. So we drifted back a little. We're right about the same level right now. A momentum-fueled overshoot is what I refer to. Security when it has a lot of upside velocity or momentum heading into a resistance level like this. I use the analogy of a 90+ mile an hour fastball going into a catcher's glove. That glove's going to snap back and then snap forward. So when you have a resistance level, if that is the one that's going to stop an advance, and when you have a near vertical rally into it, it's actually much more than common to see you get overshoot first before a reversal. Again, just that momentum carry through. Now, we'll see. Resistance is resistance until it's taken out. It's taken out. We're a little bit above it now, but that's only one index, so I'm going to cover them all real quick. That's ES. And this time around, unlike last week I had mentioned, I thought the reversal would come in the last hour of trading. This time I was a little more careful with my words, saying, look, it's more about the level, not the timing of the reversal. So I went on to say it would offer, I think a reversal is likely from this level. There it is. Despite the vigor of this morning's bounce off the lows, and what appears to have all the makings of trend day, I put decent odds on a fade of this rally starting around current levels. And so that's it. So, sometimes the selling steps in after the market closes. Futures reverse or rally overnight or in the morning. And so that's what I'll be looking for at this point in time. So let's just go over those, and then I'll get to the index ETFs for you. And I do want to touch on the market-leading FANG stocks, because again, all this stuff is very much interrelated in my opinion. So that's it. We're about where we were an hour and a half ago when I posted these charts. That's ES, NQ. It certainly stopped it there. NQ was at that 97.95 level, and that's where we parked it today, just below that. So you can see pretty, and that's the thing too, this is a little bit better resistance on the NQs right here, the NASDAQ 100 futures, than we had there on SPY, or ES that was. So that's it, resistance. And the catalyst for this was both this and something I'm going to get to in a second here. I think there was a surge in, a very rapid and pronounced surge in bearishness and shorting last week, and the market just won't allow that. It's only going to drop so much when everybody quickly gets bearish. No, a week ago, just a few days ago, everybody was bullish. The trend was up. But sentiment in the market, especially in this day and age, can change on a dime, and so can positioning. So we know we have a lot of active traders in this market. There's been quite a few articles written about that lately. Retail crowd. There's some big betting site online, and because nobody can bet on sports, they say all those sports bettors that are always wanting the juice. They're betting on the market right now. So that's what's causing. That's a part of it. What's causing this volatility. Not to mention excessive amounts of liquidity injected into the market by the central bank. So that's it. Impressive rally off the lows, but it wasn't random. Came off support, positive divergences, and that's it. NQ parked at resistance, which again, that's where I think this rally will be capped, and I already gave you some initial downside targets. Here's a little trend line to watch overnight if you're a futures trader. Uptrend line, you have the similar one I believe I had there on ES a minute ago. You could draw it off the recent lows right there. So you want to watch that, and on the way down, the same resistance levels and support levels that I had before should act as support on the way down. I think a pullback will come down here to minimum that 96.49 level, and quite possibly more. We don't have any signs of reversal yet. Again, just a rally into resistance. And then small caps, RTY, same story, pretty decent resistance level on RTY. These are the Russell 2000 small cap futures, and this is right about where it was in that post earlier today, about an hour and a half before the close. Resistance around 415, 416 or so right there. There's your reactions. Pretty much that's where we stopped cold about an hour or so before trading, and traded there all day. So again, that's That's about how far I think this one goes. That also would mesh with the wedge here. You take the widest part of the wedge, add it to where wedge breaks out. That gives you your measured target, and that about aligns with that. So that should be that. If we go higher, you can see the levels. But now let's talk about the more significant daily charts. No, before I move away from the futures, I did want to do an update because I'm very much eyeing this one. Crude, mentioned crude a while last week or so. Short here, we had a big wedge, divergent high, breakdown. We had positive divergence there on support. Got the little rally, little divergence after a much larger divergent high, and we've been stair-stepping lower. And this 34.76 was the next target from back here. That was the first target, 37.39 already hit. Once that level broke, that support level, we hit it. The next target, 34.76, and it bounced, not surprisingly, in line with the stock market. As I said, a crude short or long, typically and right now, will largely, not exclusively, but largely depend on what the stock market does. If the stock market rallies, crude tends to rally. Both are showing positive growth expectations in the economy. If the stock market, if and when the stock market fades today's rally and takes out this morning's lows, crude should do the same, and that would open the door for my next target down there, all the way down to 30.96. And I can say this, just like I think the stock markets are an objective short here, as I said they were earlier today, on that rally back to those resistance levels, I can tell you this, I can't promise it'll work, but I can promise you I think this is a very objective level to short crude, because you can short it right here back on a rally back to resistance with a stop somewhat above there, to allow for a little stop raid. If you can handle it on a 60-minute closing basis, that helps to minimize those whipsaw signals. You see these long little candles, they can sometimes punch through a support or resistance level. See these are little whipsaws back here. They clear the stops for anybody with stops too tight on that 37 or 34.76 level. That's why I like to set my stops a little bit below the levels where I think the majority of clusters of stop orders are placed for other traders. And that's also now I need to add that as a resistance level or support level, I'm sorry, when it's below its support, when it's above its resistance, because you can see we do have a few reactions here, and of course those most recent reactions as well. So really the number that we need to take out now to open the door for more downside is 34.41. The fact we've already tested that level a couple times tells me that if we get there again, that'll probably be it, most likely. But again, trade it in line with the stock market. That'll help increase the probability that if you short crude on a breakdown there, if you can make a case, an objective case to be short or to short the market at the same time, the stock market that is, then that increases the odds that you're going to have that drop. And it'd be a good one from here. It'd be about 16, better than 16% from where we're at right now. Let's clear that line out. Okay, back to the equity index ETFs. There's SPY, and again, same levels. It really not much different than what I posted this morning. We reversed a little shy of 294.85, rallied, but we're still, still well below the breakdown. You got to look at it that way. It was an impressive intraday recovery, especially when you go back a little earlier. Either very late last night or early this morning when the futures bottomed. It was even more than that, but even from today's lows, it was impressive recovery of about 4%. But we're still in a still in the downtrend, still well below the breakdown. So if you're looking, if you say, well, wow, that price action on Thursday was so bearish, it could only mean we're going a lot lower. By that same logic, if you think today's price action was so bullish that it could only mean we're going higher, don't think too much of it. It's just volatility has expanded after the breakdown. That's normal, and even during big drops, if there is more coming to the downside, you get these big counter trend rallies after a big drop. You get the in this case, in a single day there, high to low, that's about 8.5% in the S&P, and see that. So that's perfectly normal. Bigger picture says these sell signals are still very much intact. The rejection at the big gap resistance back there, and everything else that happened last week. So today, technically speaking, didn't do anything to negate or call into question those recent sell signals. As I covered on the 60-minute chart, gap. This one was almost very close to being backfilled, a slight reversal. And that also speaks to what I talk about quite a bit. And it might have been reversed in the pre-market session. Let me see if it was. Let's see, edit chart properties. I think I have the pre and post market data on. Let's see here. Always show last two sessions. Here we go. Yeah, there it is. Okay, and this is one reason that I'm a big fan of futures. I'll trade the ETFs and I'll always cover them, and I understand majority of traders use ETFs, but a lot of the times, if you're targeting a move up for a price target to the upside to hit on a long position, or you're short and you're targeting a fill that gap, you're going to do better trading the futures, or at least be open to trading in the pre-market session. Now, you might not want to wake up at 6:30, whatever they come on in the morning, the stock futures, but you can set with your broker an order. Let's say you were short the SPY and you were targeting a backfill of this gap before a reversal, since we were getting quite oversold in the near term. We had some bullish developments, those positive divergences on the futures I mentioned heading into the end of last week, things like that, that was the technical catalyst for this rally, the divergences. And then this morning you can see a beautiful backfill of that gap right there. Again, I had to turn on my pre-market data because what happened is the reversal came before the market opened. So if you were if you're not willing to trade or watching things in pre-market or don't have the time, that's when the bottom came. It was almost a perfect backfill of the gap in SPY. So now we have, let me change my notes. Well, I won't say backfilled because it didn't backfill in the regular session, but my point is a lot of times price targets, key levels are hit in the early, even sometimes in the after hour session, but quite often in the early morning session, because the futures move overnight. They go down and hit their targets, as I showed you earlier in the video earlier today. ES, NQ, they had all bounced off pretty decent support levels, and that's what happened here. So that was, that candle was, what was it, 5 a.m.? Yeah, 5 a.m. candle, I guess. Okay, so where do we go from here? There, gap backfilled, gap backfilled, gap backfilled. Well, we rallied right back up to resistance at 307.13ish, which was the bottom of this gap. So that's this TA 101 in trading 101. If you take the bigger picture, that we had those pretty powerful sell signals on the daily, I still have a little question mark, or I'm still awaiting an additional checkbox, and a very important one, and that is, which I'll get to in a second, the market leading stocks have to break down. I promise you, the stock market will only go so far without Facebook, Amazon, Apple, and Microsoft, those big companies, going down with it. They are the market leaders. It's not just because everybody loves those companies and likes to trade them and use their products. It's simply because of the overweighting that they have on the indexes. They are such large components, and everything nowadays is indexed with program trading, firing off buy and sell orders on the S&P futures, these ETFs, that when money is flowing into those stocks, it's going to lift the market with it. So that's what we need to see, and we'll take a look at those in 1 second. Let's look at QQQ. QQQ. Again, it was really the backfill of SPY, I think, that did the trick. But again, I showed you earlier that the NQ futures, the NQ E-mini futures, did hit support, as did ES, and that's where the reversal came from. They actually hit it, I think, a little earlier than 5 a.m. In the overnight session. And so we're rallied. We're not quite back to, but close to that 240.53 resistance level there on QQQ. And you can see it there, yeah, about 240.56. Decent resistance. Trend indicator, at least a PPO, still in bearish territory. That white dash line, the PPO signal line, is still below both the zero line, which is a little above here, and where I have this this line that delineates the bullish and bearish trends. It's about a negative 0.34 reading. And again, use a white line because it's the last of the two to cross. And when you're in a bullish trend, that level often acts as support when tested from above. Support, support, support. See the white line bounced. Then we had a trend change right here, said bearish. And once you're below, it tends to act as resistance. Support there. All these arrows show you where it acted as support. Here we were in a bearish trend. We had a crossover. Came back tested from below, kept the trend bearish to right here. Then we had a bullish cross, and it said the trend is now bullish. So those are the things I'm watching, and why I favor those rallies into resistance as being the end of the run. But it's certainly not a back up the truck and bet everything short moment. No, and that is because of these guys here. Let's talk about them. Let's go to QQQ again. Why aren't my stocks loading properly? I have a watch list on the other page. Talking to myself here. There we go. All right, I had to sort it by market cap. Biggest one, Apple. These are all the big, $1.5 trillion company. And there's that trend line support I showed you this morning. Apple kissed it and reversed off it. So Apple, zero sell signals. Like I said last week, it was a big down day on Thursday because of the index selling, but it didn't do anything technically. It didn't violate a trend line. It didn't come back below the breakout to previous all-time highs. Remember, we had a previous high and a divergent high right here. Apple dropped, came up, recently broke out, and we're still above it. So you need to see first this trend line break, and then right below it, that 327 level. That would give us, if that happens, and if it's impulsive and we clearly put that level in the rearview mirror, that will be a failed breakout. Until unless that happens, this stock is unmistakably in an uptrend. And so that's that. So we need that one to break before the market does much of anything else, and that's why it's not an all-in short moment right now. Microsoft, same story. You have a couple lines, but I have the yellow lines here. This little trend line right there. It's holding above, and then about 180. Let me round this up. There it is, about 180. Pretty decent support. And again, it's these guys collectively. It's not just one breaking down. You need to see the majority of these FANG stocks break down. There's Amazon trend line plus price support about 24.70 just below. Again, that's a breakout to all-time highs right there, and a few reactions there as well. And then Alphabet divergent high, failed at that gap, was cracking below this trend line this morning, that about 1398, but recovered and then closed back above it. So it still needs a daily close, either a very solid break where it has little chance of recovering at the end of the day, especially if that's late in the session. You're an hour into the session, or an hour left in the session, you're down here, probably not going to get that close back above there, but we did. It was only a brief dip down, so this one's still still pending a breakdown, if you will, off that level. And these divergences say it'll probably come. It's just a matter of, does it come soon? Do we go up 5% higher, 6-7%? Facebook, 222.78, pretty well-defined support. A lot like previous all-time high right here. And then here's our breakout candle, big gap up, impulsive candle, back tested. We've been back testing the breakout level. So that's a very big level. The more reactions on the level, the more technically significant. So if and when it goes, that would be a sell signal. But until and unless it goes, the stock is still trading right near all-time highs in a bullish trend, again, without any sell signals on it that I can see. Okay, so just last week, I think it was on Wednesday, the day before the big drop, I put together the video and a lot of charts showing you the extremes, the put-call ratio, which shows everybody with an extreme bullish number. When you have an extreme low reading on the put-call ratio, means there's a lot more people buying calls and puts, and there's been a lot of articles. And then we had that big down day, and my goodness, the news just flowed right away. Everyone started talking about coronavirus again, and started talking about how all the retail traders and the surge in new brokerage account openings, in other words, people that don't have experience in the market, and how they think they're smarter than Warren Buffett for selling his airline stocks, and they bought them and they're making money, and buying Hertz and all these other trash companies that would have gone bankrupt already and will be worthless at some point. So that was the news, but boy, the news changes quick. But what I wanted to show you here is, let's look at the volume. And again, this is why the market can only go down so much. Sometimes it takes months, like it did for the sentiment to get to such extreme bullish levels as they were last Wednesday when I did that video. And then other times it can take a big drop like we had last Thursday to quickly change sentiment. And let me move this up so you can see what I'm talking about. Okay, these are the volume bars. This is SQQQ. If you like shorting or you're an active trader, these are the three. This is a 3-time leverage short NASDAQ 100 ETF. And as you can see, and I'll scroll back, this is the on Thursday we had the second highest volume ever in that ETF right there, right about matched with this one here. And you can see that didn't work out so well the next few days. It was right about there as I put the crosshairs. And then Friday we had the highest volume. So those that didn't get in, that tells me a lot of people jumped on these short ETFs and were buying those, again, as evidenced by the 2 large candles. And so the market must correct that. You can't have excessive short interest in the market. And by that logic, if if people are buying SQQQ and then TZA, you can see TZA, biggest volume ever on Friday and almost as big, second biggest on Thursday, the day of the drop, meaning people were flocking in, couldn't get enough of TZA. And again, the market had to kind of do a quick adjustment there because we went from a lopsidedly bullish sentiment to, in my opinion, a little too bearish, a little too fast. So I think that's technically, or under the hood of the market, what I suspect is happening, and I use this as as kind of a gauge, a tell, seeing all that money piling in. If they were up that day, and it was up earlier that day, in the beginning of the day, it had gone positive, meaning the markets dropped even more. That tells me the majority of that was probably buyers in there. And now today, I imagine we're seeing some stopped out. You might have had some more buying. It's hard to tell how much of it was buying pressure and how much selling pressure. But at the end of the day, we closed the day down. Of course, we started the day up. So here's TZA. It's 3 times leverage, of course, remember. So when I do these numbers, it's 3 times what the index did. But from the highs where we were about at the open today, we were about 10% positive on TZA. And then we ended up closing the day down, as you can see, about 7%. So that's about a 17% round trip in TZA alone. But again, don't get tied up in those numbers when you're using leverage. You have to look at what the the small caps itself did, IWM, and it's still a pretty impressive 6.5% rally. So that's it. I think that had a large part of it. It's hard to say, but I would suspect this reversal cleared out a good part of that short interest, brought back a lot of the bullish sentiment. Really, we won't know until until maybe tomorrow, maybe the end of the week. We'll see. What I can say in confidence, like I said, give me a little pause. I need to see the market leaders break in the FANG stocks, even though those are mega cap stocks, the largest in the world. They're not in IWM. IWM probably is only going to go so far, as you can see today, and just about any other day. Look at Thursday, look at Friday. Typically, all these indexes, small, mid, and large, move together. Typically, not always. There's sometimes you have disconnects. But where I'm going with that is, while it's hard to say if there's more upside or if the breakdowns will even stick at all, the breakdowns we had last week, I can still say with conviction that this 145 level was a big level on IWM, a big support level that was broken here, followed by a waterfall sell-off, and then recently taken back on what I call a momentum-fueled overshoot, and it was right there as a line. We had a couple days where it shot over. The momentum of that strong move up carried it over, and then boom, once it failed, we gapped down impulsively, and we're still below it. So let me turn those lines back on, or let me just draw it in so you don't see all the other lines. I'll draw it in with this tool. If I turn it on, you're going to see a lot of trend lines and all that kind of takes away from it. Let me get a line tool. So right about there. Again, so there's a 145 level, and here it is. So we're still well below that level. So that sell signal is intact on the daily chart, hasn't been invalidated. So despite the impressive reversal today, and it could be the start of more, and if it is, look, there's a big old gap right here to be backfilled, that big gap that took us down below 145. That's your next logical resistance level. That would also offer an objective short entry. But if we take that out, then it starts to chip away at the bearish case, and the next thing they do is they run at these highs. If they take out that previous high, that further chips away at the bearish case, and it helps the bullish case for a run up to the next highs up there. All right, so let's leave it here, and we'll see where we go tomorrow. Pick up. We'll watch those levels on the futures. Pretty much, there are some overhead resistance levels that still can come into play. But like I said, I think if my suspicions are correct, this is probably about it. And we'll reverse and pull back at least to those minimum targets. I think I might have given you some on SPY and IWM. Look at today's lows for I think as another pullback. We hit that in the pre-market session right here. Was that today? 9 a.m. And we could have another run down there. That's next support down below about 130.66, and then if that gets taken out, gap backfill, big old gap right here on IWM down to about 125.48. So that's it. Those are the levels to watch on IWM. Big gap above right here. Let's box that in for you. There's a big gap there, and then we already backfilled this one here. Next big gap is right here, and that's where you can see that candle low bounce today. So stuck between support, meaning right here at the top of the gap, and resistance, meaning the bottom of this gap. And like I said, no guarantees that it works out, but I think this is an objective place to either book profits if you went long on the tag of those support levels on the futures and the index ETFs this morning. Because of those divergences, or if you're just looking for a place, if you held off. I know a few people asked me last week, and I said, no, the objective short was when the markets broke down earlier last week. On Thursday, it looked like the bulk of the initial move was already priced in on Thursday. So at that point, and I'll still maintain the best thing to do was, and I think is, to wait till a bounce, which we've now had. We've bounced back to resistance, so that's it. And if we bounce a little higher, that's probably the last place that I would add short exposure to IWM. If we get there with a stop not far above it, I'd watch that. All right. I'll wrap it up here, get this out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great evening.